Imagine paying hundreds of dollars more for your car than you really have to. What if I told you that one simple decision could save you thousands of dollars over the life of your auto loan? But here's the twist. Refinancing your auto loan could either be the smartest move you ever make, or a mistake that costs you even more. The difference depends on knowing a few key details most beginners completely miss. And that's exactly what we're uncovering today. Number 1. What does refinancing an auto loan really mean? Refinancing your auto loan simply means replacing your current loan with a brand new one, usually from a different lender. The new loan pays off your old loan, and you begin making payments on the new terms. Think of it like switching cell phone providers. You are still paying for the same phone, but now under a new plan that hopefully costs you less each month. Example: if you currently pay $450 a month on your car loan, refinancing might lower it to $350 a month, freeing up $100 every single month. Over a year, that is $1,200 saved. Number 2. Why do people refinance auto loans? The number one reason is to save money. If interest rates have dropped since you first got your loan, you might lock in a lower rate and pay less in total interest. Another big reason is lowering your monthly payment. Maybe your budget is tight right now. Extending your loan term might reduce the amount you owe each month. Some people refinance to remove or add a cosigner. Others do it to improve their credit mix or even switch lenders they are unhappy with. Example: imagine you bought your car at 12% interest when your credit was poor. 2 years later, your credit improves. Now, you qualify for a 6% loan. Refinancing could cut your interest in half. Number 3. When does refinancing make sense? It makes sense when interest rates are lower today than when you got your loan. It also makes sense if your credit score has improved since you financed your car. And if you just need more breathing room in your budget, lowering your monthly payments can help. Example: if you owe $15,000 on your car at 9% interest and refinance to 6%, you might save over $1,000 in interest by the time the loan is fully paid. Number 4. When refinancing might be a bad idea. Not every refinance saves you money. If you extend your loan too much, you could end up paying more in interest overall, even with a lower rate. Also, if your car is already very old or close to being paid off, refinancing may not help. Lenders usually do not refinance vehicles older than 10 years or loans with very small balances left. Example: if you only have 12 months left on your car loan, refinancing into a new 48-month loan may lower your payments but drag out the debt and cost you more in interest. Number 5. How do you qualify for a refinance? You usually need a steady income, a decent credit score, and a vehicle that still holds enough value. Most lenders also want the loan balance to be higher than a certain minimum, often $5,000. Example: if you owe only $1,500, lenders may reject the refinance because it is not worth their effort. Improving your credit score before applying gives you the best chance at a lower rate. Number 6. Step-by-step process of refinancing. Step 1. Check your current loan details. Know your interest rate, monthly payment, and payoff amount. Step 2. Check your credit score. The higher it is, the better deals you will get. Step 3. Shop around with multiple lenders. Online lenders, banks, and credit unions all compete for your business. Step 4. Compare offers carefully. Look not only at the monthly payment, but also at the total interest you will pay. Step 5. Apply and, once approved, your new lender pays off your old loan. You then start making payments under the new terms. Example: if one lender offers 7% but another offers 5%, that small difference can save you hundreds of dollars over the loan term. Number 7. How much can refinancing actually save you? This depends on your balance, your interest rate, and your loan term. Example: let's say you owe $18,000 on a car loan with 9% interest. If you refinance to 5% interest, you could save nearly $1,500 in interest over 4 years. Even if the savings per month feels small, like $50, that adds up to $600 per year. Imagine what you could do with that extra money. Number 8. Fees and costs you must watch out for. Some lenders charge application fees, origination fees, or prepayment penalties on your old loan. You need to calculate if the savings outweigh these costs. Example: If refinancing saves you $1,000 but the fees are $400, your net savings are only $600. Still a win, but less than you expected. Number 9. The role of credit unions in auto refinance. Credit unions are member-owned and often offer lower rates than traditional banks. Example: if your bank offers you 6%, a credit union might give you 4.5%. On a $20,000 loan, that difference could mean hundreds in savings. Many people overlook credit unions, but they can be your secret weapon in refinancing. Number 10. What about refinancing with bad credit? It is possible, but you may not get great rates. Some lenders specialize in borrowers with lower credit, but expect higher interest rates. Example: if your credit score is 580, you might only qualify for 12% interest. Refinancing at that rate would not save you much, if anything. The better strategy is to improve your credit first. Pay bills on time, reduce debt, and wait a few months before applying. Number 11. The risk of being upside down. Being upside down means you owe more than your car is worth. Lenders may refuse to refinance in that case. Example: if your car is worth $10,000 but you owe $13,000, you are upside down. Some lenders will still refinance, but you might need to cover the difference or roll it into the new loan, which could trap you in even more debt. Number 12. The impact on your credit score. Refinancing does trigger a hard inquiry on your credit, which may drop your score by a few points. But if you make your new payments on time, your credit can actually improve over time. Example: a small dip of 5 points today could turn into a 30-point gain in the future from on-time payments. Number 13. What beginners often overlook. Many beginners focus only on lowering their monthly payment. But what really matters is the total cost of the loan. Example: if your payment drops from $400 to $250, but you stretch the loan from 4 years to 7 years, you may end up paying thousands more in interest. The question is not, can I pay less each month? But how much will this cost me in the long run? Number 14. Real-life story. A friend of mine bought a used car at 11% interest. His payment was $470 per month. After improving his credit, he refinanced to 5.5%. His payment dropped to $330. Over the life of the loan, he saved more than $2,000. This is the kind of success story refinancing can bring when done right. Number 15. Should you refinance your auto loan? Here is the bottom line. Refinancing can save you a lot if interest rates are lower, your credit has improved, or you need lower payments. But it can cost you more if you focus only on the monthly payment without looking at the total loan cost. Refinancing is not a magic trick. It is a financial tool. And like any tool, it works best in the right hands and under the right conditions. Number 16. Refinancing to shorten your loan term. Many people think refinancing is only about lowering monthly payments, but you can also refinance to shorten your loan term. By moving from a 60-month loan to a 36-month loan, you might pay a little more each month, but you will save thousands in interest. Example: on a $15,000 balance, shortening your loan by 2 years could save you nearly $2,000 in interest charges. Number 17. Using refinancing to remove a cosigner. If someone co-signed your original auto loan, refinancing gives you a chance to remove them. This is a smart move if you are financially stable and no longer need help qualifying. Example: a young driver who had their parent as a co-signer can refinance once they build their own credit, giving their parent financial freedom. Number 18. Refinancing to add a co-signer. The opposite can also be true. Adding a strong co-signer with better credit can help you qualify for lower rates. Example: if you are stuck at 10% interest, but your spouse has excellent credit, adding them as a co-signer could drop your rate to 6%, saving you thousands. Number 19. Cash out auto refinance. Some lenders allow you to borrow more than your remaining loan balance and get the difference in cash. This is called cash out refinancing. Example: if your car is worth $15,000 and you owe $8,000, a lender may refinance your loan at $12,000, pay off your old loan, and hand you $4,000 in cash. But be careful. This increases your debt and could be risky if you are not disciplined. Number 20. Refinancing after a lease buyout. If you bought your car at the end of a lease, refinancing can help spread out the payment. Example, you buy your leased car for $18,000. Instead of paying it in one lump sum, refinancing turns it into affordable monthly payments. Number 21. The effect of mileage and vehicle age. High mileage and older cars often make refinancing harder. Lenders see them as risky because the car could break down before the loan is repaid. Example, a 12-year-old car with 160,000 miles may not qualify for refinancing, even if you have great credit. Number 22. Refinancing to change loan type. Some people move from a variable interest rate loan to a fixed rate loan through refinancing. This gives stability and protection from rising interest rates. Example, if your variable rate is 6% today but could jump to 9% next year, refinancing into a fixed 6.5% keeps your payment predictable. Number 23. Timing your refinance with the economy. Interest rates rise and fall with the economy. If rates are expected to increase, refinancing sooner can lock in lower rates. Example, if rates today are 5% but forecasts predict 7% in 6 months, refinancing now could save you from being stuck with higher payments later. Number 24. Using refinancing to restructure debt. If you have multiple high-interest debts, refinancing your auto loan to a lower payment could free up money to pay off those debts faster. Example, lowering your auto payment by $120 could give you more cash to attack a credit card balance at 20% interest. Number 25. Building financial discipline through refinancing. Refinancing is not just about saving money. It can be about creating structure in your finances. Example, someone who used to struggle with payments might refinance to a lower rate and shorter term, giving them motivation to pay off the loan faster and stay on track. So now the big question is, should you refinance your auto loan? Well, that depends on your situation. Do you want to save money on interest, lower your monthly payment, or both? I want to hear your thoughts. If you could save even $50 a month by refinancing, what would you do with that extra money?